Well, let's now get a wrap on how investors have been trading these markets. Gemma Dale from nabtrade is joining us now live to do just that. Gemma, great to have you on. Happy Friday to you.
Here, here.
Have those volumes been still as big as what we saw last week?
It's been really interesting to see how people have been playing this market. I get asked this a lot, obviously, whether or not people are loving the volatility. The volumes we see are incredibly highly correlated to what is happening in the market. Effectively, it's dip buying or nothing. So if the markets come off really hard overnight, people are super excited. They get on board first thing in the morning. We see really, really active trading, and particularly if it's any specific stocks that people have had their eyes on. But if the market has bounced overnight and there's a positive lead from Wall Street and the SPY is up, everyone gets bored and goes away. And so it's quite interesting to see what's happening with our guys. Is a very strong indicator of sentiment on the platform. Cash is still incredibly high. A lot of people are waiting for a pullback. We have many investors who've been buying the dip for 2 years. It's been a very successful strategy for them, and they just keep waiting for more opportunities to do it. This month, or the last month, January, has given them more opportunities than the sort of previous 6 months. So they're happy about that and hoping for more.
I remember last time I spoke to you, Gemma, I think it was the first week of January, and you said you couldn't believe that there was nobody taking holidays. Everyone was trading the markets. Has that faded, or is there just too much volatility and just too tempting to keep coming in?
No, they're sitting there waiting for the opportunity. So people are so much more active now. The world's changed quite dramatically in the world of trading for retail investors. You can see on your phone what is happening. We have investors who get up in the morning or wake up in the morning. They may not even be out of bed, and they will have read the leads. They knew all about Facebook last night. So, I mean, obviously they had seen that in the news in the afternoon, that in the aftermarket it had been absolutely hammered. And so we saw very aggressive trading in Facebook overnight, and then also a little bit of a nibble at Magellan, a little bit of a nibble. They're not as keen about that, but you can see them just waiting for opportunities. They tend to be quite selective. If it's a really, really dark day, then we'll see some very aggressive buying of ETFs for those who don't have a particularly strong position on what they'd like to hold. They just want some Peter. But for everybody else, they're really waiting for their opportunities, and they're willing to move extremely quickly. It doesn't change, but they're looking for dips. They're not looking for quite so many opportunities to sell at the moment.
Gemma, another thing that doesn't change is the interest in Fortescue Metals. Let's talk the miners. What volumes are we seeing this week?
Yeah, they're just huge. I keep waiting for it to not be Fortescue, but this drift down toward the long run average for the iron ore price just isn't happening. The Vale volume's nowhere near what anyone expected by this time, and so price is under, it's got a rocket under it again, and so the numbers are great, and the iron ore miners are doing really well. Fortescue, we're seeing trimming, obviously. So our guys, they trade it really actively. The trade has worked really well for them. I've said this many times, it's a handful of very wealthy people who are very active in this stock. They know what they're doing. It keeps working, and as long as it keeps working, they'll keep doing it. BHP's a sell at this price, which is interesting. Fortescue, they'll mix it. The one that is quite surprising, BHP is frequently in our numbers. It's sort of a core holding for many Australians, and so it's not surprising to see it there. Rio, much less so. Rio has not always been in the numbers. Sometimes it won't make the top 20. It just doesn't attract the same amount of interest. It was top 5 yesterday. It's a 92% sell at this price. People are really happy to trim a bit if they're holding it. They feel that it's done extremely well, and they don't need to hold quite so much at this price.
As we were just discussing, Gemma, like last time a Westpac gave out results, the market absolutely punished Westpac, and then this time round it's like, oh, nothing to see here. Why the interest in Westpac?
Yeah, Westpac's absolutely fascinating to me. I've said this before too, that NAB has always been the preferred stock on nabtrade. I can't begin to imagine why. And yet, after Westpac's results, there was a real rotation into Westpac. It actually started at the beginning of last year. So we saw very aggressive buying from our high value investors in Westpac January 2021. That didn't play out terribly well for them as a trade, but there was a perception that at some point there'd be some reversion to the mean. It hadn't performed as strongly as the others. When it got hammered in its annual results, we just saw super aggressive buying, and it's continued through the last few months. So the little bounce that it's having at the moment, our guys are trimming a bit, but it does seem to be a high value stock, so the average trade sizes are very, very high, and it's the preferred of the banks. People feel like it's got an opportunity to come back, whereas something like CBA it's so far out in front. Even when it comes off, it's too expensive for them.
Gemma, what about some of those interesting smaller trades that are coming through on the platform?
Yeah, so there's a few things that get hurt when the market is deeply disappointed with what's going on. Magellan's the one I find super interesting because it's come off so hard, and it was a real retail stock. Investors knew Hamish really well. They were very attached to him as a fund manager. They were very attracted to the actual business as well as the product. But we saw far more interest in Magellan Financial Group than we saw in Magellan's actual products from retail investors. And they had ridden it all the way up. I mean, it was greatly bigger than a 10 bagger for many of our guys, and they've really enjoyed it. And yet it's off nearly 75% from its high. So it's had this absolutely horrific 12 months. And our guys love a bug, and they love something that's been sold off, particularly if it's a former darling. And yet Magellan now, I think all the energy's been sapped out of those guys who still had an appetite for it. So yesterday off 7%, they just weren't going to go there. Zip is very similar. Zip was more of a trading stock. It was not so much a darling that people bought and held onto. It's more of a trader's stock where they were trying to eke out gains. But again, the energy's been sapped right out of it. There are small buys, there are nibbles. The most interesting thing about this particular group, we've got Satira on there as well, not a single trade over $100,000. Now, I won't say that all of our trades are over $100,000, but if you were looking at Fortescue or Westpac or any of those bigger stocks, a meaningful proportion, often 70-80%, will be over $100,000, the average trade size. And yet these ones, you're sort of talking under 10. So people are nibbling at this, and a small number of nibbles. The appetite's just not there if something looks like it's going to consistently disappoint.
Well, Gemma, we've spent all week talking about Amazon, Google, Facebook, etc. How is that translated into your platform?
As you know, an international where it's kind of Tesla and then daylight, and it's consistently Tesla and daylight. I say it every week to the point of boring everyone stupid. Finally, something interesting happened that our guys were going to get all over. So Meta, those results were very widely flagged in Australia before the overnight trade, so they obviously got punished in the in the aftermarket, and our guys knew it was coming, so we saw very active buying last night. That's interesting in itself. Probably more telling though is the average trade size is about $7,500. So as I said, you know, something that people are really keen on, you'll see 40-50% of trades over 100. These are really small buys. They're people who are keen to pick it up, but very small average trade sizes. Now, big guys were just not in there at all. And PayPal was in there also. So they do suddenly have a bit of a contrarian bent on international markets. Amazon was way out. There was no interest. The other one that's been very interesting, I was talking maybe 12, 18 months ago about ARK Invest. We have watched ARK it attracted a bit of attention. It wasn't sort of top 5 by any means, but it was there and there was interest as Cathy Wood was getting a lot of press. It's Berkshire Hathaway that's back in the top 10 now. So there's always a rotation, and people are back on value, and they're back on Warren Buffett, despite his advanced age. They think he might be the guy to ride again.
My goodness, it's nice to see it mixed up. I know you say the same thing every week, but that is still valuable information. Thank you so much, Gemma. Enjoy your hopefully not too soggy weekend.
It's wonderful to see you guys.